Hi students, welcome to Radhakrishna Tech. Today we will calculate purchase condition under net payment method. This is a illustration. So this sum is based from Amalgamation chapter. So illustration 1. Okay, first we will read out the illustration over here. Balance sheet of M Limited shows as following on 31st/3/2023. So this is a M Limited. This is a transferee company. Mean to say it is in a vendor company or a seller company. So their equity detail, the capital detail they have shared here. That is 1 lakh equity shares of 10 each, fully paid at 10 lakh rupees. So this 1 lakh equity share is completely paid out. Means the company has received the full payment. So it's a value is over 10 lakh rupees. Then 50,000 5% preference shares of 10 each. This is also fully paid. So we have received the fund of 5 lakh rupees. Then 6% debenture 5 lakh rupees. Now the sum they are telling is N Limited is acquired by M Limited. So this company M Limited is acquired by N Limited on the same day. Is it the 31st/3/2023 and agreed to pay the following. So this is the following agreement they have made between the transferor and transferee company or seller or a purchaser company to take over. So the first thing what they are telling is 50,000 equity shares of 10 each at the rate of 12.5. So 50,000 of equity shares they are going to pay at 12.5. Okay, actually face value is 10 rupees. So 2.5 is a premium. So 2.5 premium amount they are giving and they are taking over the M Limited. Okay, then again the 30,000 8% preference shares of rupees 10 each. Means 30,000 preference share they are going to give in N Limited for the M Limited shareholders. Then 7% debentures of extent of rupees 2 lakh rupees. So currently M Limited is having it 5 lakh rupees debenture, right? So they are giving 7% debentures at rupees 2 lakh. Okay, this is for to the equity shareholders of Limited. So first category is only for the equity shareholders. So because in M Limited there are two categories, one is for equity and other is for preference shareholders. So both we have to pay and they have to take over. So this is for equity shareholders. Then the second paragraph is telling that whatever they are paying to preference shareholders. So 30,000 equity share. So 30,000 equity shares of 10 each at the rate of 12 they are going to pay. So 30,000 equity shares they are going to pay to M Limited preference shareholders at 12 each. Means 2 rupees premium they are going to give. Then 20,000 preference share 8% of 10 each to the 5% preference shareholders of M Limited. That what they are going to tell is the 5% preference shareholders are there, right? For them they are going to pay 8% preference share at 10 each for 20,000 preference shares. So 20,000 preference share they are going to give in for 50,000 preference shareholders at 10 each. But the percentage value will be differ. That is from 5% to they are taking over to 8%. Okay. So now what the question is, what they are asking, we have to calculate a purchase consideration for this illustration under net payment method, because they have given completely what is the payment they are going to make it payment. So we have to calculate under net payment method only. So first we will segregate between equity shareholder and preference shareholders. First thing we will calculate for equity shareholders. So we will tell amount. I put it here. Particulars. Hope you can see this. Calculation of, this is a solution. Calculation of purchase consideration. So first equity shareholders. Okay. So first they were telling 50,000 equity share of 10 each at the rate of 12.5. So first thing we'll pay through face value. So 50,000 into 10, that is equal to 5 lakh. Then one more thing they are telling 50,000 into 2. This is premium. So just I mentioned here premium. This is face value or par value. both you can take. So 50,000 into 2 1 lakh. So put together you have 6 lakh rupees. Okay, for equity shareholders, equally there are 50,000 equity shares at 12 they are paying, because 10 is at face value and 2 is at premium. Second thing, they are telling 30,000 8% preference share at 10 each. So currently they have 5% preference share only. So N Limited is giving 8% preference share to M Limited. That is how many numbers? 30,000 preference share they are going to give. So 30,000 into 10. So this is preference shares. This is equity shares. This is preference share. 30,000 into 10, how much? This is at face value they are giving. So 30,000 into 10 is equal to 3 lakh. Okay. So you can put it 3 lakh. Then the next item, what in C, 7% debenture to the extent of 2 lakh. So 5 lakh to debentures they are going to pay 2 lakh only, but that is a 7% debenture they are going to pay. So here the debenture. So this is a net payment method. What M Limited is giving to M Limited, we have to calculate this. This is a purchase consideration. Then in the sum, if they are giving the assets and liabilities taken over, the difference will be goodwill or capital reserve. That's it. So debenture at 7%, that is equal to 2 lakh. So 2 lakh. So total of this, total to equity shareholder, how much? 6 plus 3, 9, 9 plus 2, 11. So total 11 lakh. This is much. Okay. Now payment to, first we are calculated to equity shareholder, what they are going to pay to equity shareholder, guys. Now we are going to calculate for preference shareholders. Payment to preference shareholders. So first thing, what they are telling, 30,000 equity shares of 10 each, that the rate of 12 each. So 10 rupees equal value they are going to pay at 12 rupees. So 2 rupees premium. Okay, here what I have done, okay, I have made one mistake. That is, it is not 12 rupees, it is a 12.5. So instead of here, you can calculate 12.5, 50,000 into 12.5, how much? 1 lakh 50. $50 into 50, 2 times, right? 2 times 100, 12.5, 3 means. Okay. So this is 6 lakh 50,000. So 11 lakh 50,000. So I'll write here 11 lakh 50,000. Okay. Here also I can check this. Okay. Now 30,000 equity shareholders, equity share they are going to pay to the preference shareholder at 12 each. So equity, that is equal to 30,000 into 10, that is equal to face value. So 30,000 in 10 is 3 lakh. Now equity at premium, that is equal to 30,000 into 2. So this is premium amount, that is equal to 60,000. So put together 3,60,000 they are going to pay. The second item, B item, what? 20,000 preference shares they are going to pay. They are going to pay to the preferential holders at 10 each. So 20,000 preference share at 20 rupees they are going to pay to the M Limited preferential holders. So we can calculate here is 20,000 PS. 20,000. This is at face value, so directly you can type it face value. 20,000 into 10. So it is 2 lakh, right? 2 lakh you can do. So put together total of this. What is the total of this? total paid to PS holders 3.6 and 2, so 5,60,000. Okay. So 50,000 into 10, 5 lakh, 50.2.5. Okay. Preference shareholders. Okay. So now this is a calculation of purchase consideration under net payment method. So M limited. So here I'll put a total. What is the PC also? Purchase consideration. So this total, this and this put together, what is your value? So 11 lakh plus 5 lakh, 16 lakh, 16 lakh 50, 17 lakh 10,000. Okay. So your piece is 17 lakh 10,000. This is very simple. This is an illustration. So one by one illustrations I will be calculating it. So we will understand illustration wise details also here. Okay. So first what they are asking here is M limited is this is the first thing. M limited balance sheet they are given. The capital details they have given. What is the equity shareholders detail and preference shareholder and debenture holder. Here the second statement they are telling is M limited is agreed by N limited itself. So on the same day itself by paying this below values. One value, one paragraph they are telling that they are what they are going to pay to equity holders, and second they are telling what they are going to pay to the preference shareholders. Separately they are given. So based on this detail we will calculate individually, then put together we will put what is the calculation of purchase consideration. So here simply instead of when they are going to take over, they have to, the seller or purchaser, transfer companies have to agree to certain terms and conditions. Based on that only your purchase consideration will be calculated. So they have given that terms and conditions over here. So this is a very simple calculation. So this is the examination question, and this came into Bangalore University's one of the examination twice in 2006 and 2014 also. This is a 6 months question. So it is a very useful calculation. Please note down this and let us know for any queries, and we will answer in the comments. Okay. Thank you. Please subscribe.